I want to read you exactly one sentence, a statement I made publicly just yesterday after returning from an extensive trip across Asia. The United States can no longer be relied upon to fight to defend its interests. I did not write that as a partisan political opinion. I wrote that as a direct first-hand observation after spending 30 consecutive days traveling across the Asian continent. 10 of those days were spent entirely inside China, speaking face-to-face with the leaders, the institutional investors, and the primary decision-makers who are actively reshaping where the world's money flows right now. That single sentence, the ultimate conclusion that every single person I spoke with reached completely independently, has a direct, unavoidable financial consequence for every single dollar you currently own. It is a consequence that the vast majority of American financial advisors have never warned their clients about. And the reason is simple. Most American financial advisors have never spent 10 days on the ground inside China, speaking directly with the people who are executing these monumental decisions as we speak. I have. And what I am about to show you in this video is the most critical first-hand financial intelligence I have ever shared publicly. This is not historical analysis. This is not data parsed from a distance. This is exactly what I personally saw, what I personally heard, and what I definitively concluded from 10 days of direct observation inside the country that is reshaping the global financial order faster than most Americans can comprehend. The halfway promise I need you to stay with me through every single minute of this video. Because exactly at the halfway point, I am going to reveal the one specific thing I observed in China that immediately forced me to change my own personal investment positioning the moment I returned home. It is the one thing that made me state publicly that Chinese markets look remarkably attractive right now. It is the one observation that directly and aggressively contradicts what almost every American financial advisor is telling their clients today: do not skip ahead. What I am about to show you first is going to make that halfway revelation land with the absolute full force it deserves. Subscribe right now, because what I am about to share comes from direct, personal observation of the most consequential financial paradigm shift happening anywhere on Earth right now. The room where it happened, let me start with the exact moment that changed everything for me on this trip. I was sitting in a room in China with senior decision makers. These are people who control highly significant pools of capital, people whose daily investment decisions literally move global markets. I looked at them and asked a very direct question. What has changed most significantly in your view of America over the past 5 years? Every single person in that room gave me the exact same answer, completely without hesitation. We no longer believe America will show up. Notice the phrasing. Not, we no longer trust America. Not, we prefer China. They said, we no longer believe America will show up. I heard that specific phrase from multiple different people across multiple different conversations in multiple different countries during that 30-day trip. It represents a complete, unanimous, operational conclusion among global elites that the United States of America can no longer be counted on to honor its commitments when honoring those commitments becomes financially or politically costly. The two pillars of your money now. I want you to stop and truly understand why that conclusion is the single most important financial statement I heard during those 10 days. This is not just a geopolitical observation, it is a deeply financial one. The US dollar's status as the global reserve currency is the invisible foundation beneath the value of every single dollar in every American bank account and every American retirement portfolio. That foundation rests entirely on two pillars: American economic strength, the global perception of American reliability. The world must believe that America's commitments are credible, that its institutions remain stable, and that the global system it built will continue to operate according to predictable rules. Right now, both of those pillars are cracking simultaneously. Before I show you exactly what this means for your money, I need to stop and tell you something deeply personal. Back in 1982, I sat in an empty office with absolutely nothing. I had publicly predicted a massive economic depression, and I was completely, fundamentally certain that I was right. I ended up having to borrow $4,000 from my father just to pay my family's basic bills, while my wife and two young children depended on me. That massive failure taught me the single most important lesson of my entire career. The lesson wasn't about what I got wrong regarding the economy. It was about what I got wrong regarding human psychology. I vastly underestimated how long people living inside a system will flat out refuse to see that the system is breaking, right up until the breaking becomes completely undeniable. The view from the outside, the halfway revelation, the people I spoke with in Asia are not living inside the American system. They are observing it from the outside. And from outside the American system, the breaking is already completely undeniable. It is not approaching undeniable. It is already there. While people inside America are still endlessly debating whether the dollar's reserve status is at risk, the people actively managing massive capital across Asia have already concluded that it is, and they are already acting on that conclusion. That massive gap between what people inside America want to believe and what people outside America have already mathematically concluded is the most important financial discrepancy I observed during those 10 days. And it is a gap that, when it finally closes, will close entirely at the expense of dollar-denominated assets. Now, let me show you exactly what is happening with China. This is the revelation I promised you at the halfway point. I said publicly after this trip that Chinese markets look incredibly attractive. I want to make sure you hear this clearly. I, your name, after spending 10 days on the ground inside China, am telling you that Chinese markets look very attractive. Here is precisely why, and I want to give you the specific data, because the raw numbers make this undeniable. The American bubble, American stock markets are currently trading at price to earnings, P/S, ratios that actively exceed the 1929 pre-depression bubble peak. The S&P 500 currently trades at approximately 35 times earnings. The largest American technology companies are trading anywhere from 45 to 80 times earnings. The bleak projections. Goldman Sachs currently projects just a 3% annual return from American stocks over the next decade. Vanguard projects approximately 5%. These are not fringe opinions. These are the projections from the most credible, heavyweight institutional forecasters in the world. They are projecting near zero real returns from the exact asset class where most American investors have concentrated all of their wealth, the Chinese reality. Meanwhile, Chinese markets are currently trading at approximately 12 to 15 times earnings, literally less than half the valuation of American markets. Consider this. China's economy has grown from being just 15% of the American economy 2 decades ago to 60 to 70% of it today. We are looking at a scenario where the country whose economy is growing the fastest and whose geopolitical influence is expanding the most rapidly is trading at less than half the valuation of the country whose economic dominance and geopolitical reliability are both being aggressively questioned at the exact same time. I found Chinese markets very attractive because the massive gap between their current valuation and their underlying economic trajectory is the widest discrepancy between price and value I have observed in any major market during my entire career in finance. The tribute system Arabut, beyond the raw valuation numbers, here is what I critically need you to understand about what I observed. China is entering what I have publicly described as a tribute system era. This is a historical period where surrounding countries are beginning to align with Chinese economic influence, not because they are being forced to at gunpoint, but because the sheer gravitational weight of China's economy makes alignment the most economically rational choice. During my 10 days inside China, I literally watched the infrastructure of this global realignment being built in real time. Trade relationships are being fundamentally reoriented. Massive capital flows are being redirected. Trillion-dollar investment decisions are being made based on a new worldview in which American economic centrality can no longer be assumed as a default. This is not a theoretical academic exercise. It is highly operational right now, and it has profound direct consequences for the value of American assets relative to the rest of the world. consequences that are absolutely not yet reflected in current American market prices. The quiet collapse of the dollar. I want to pull back the curtain on something that most Americans completely misunderstand about how a reserve currency transition actually looks in its early stages. This is the exact mechanism that connects everything I observed in Asia directly to the numerical balance in your checking account. When a reserve currency's reliability is questioned by the global entities that hold it, those holders do not panic. They begin reducing their exposure gradually and quietly, not dramatically, not with loud press conferences, quietly. Central banks reduce their US dollar reserves fractionally, month by month. Countries begin settling bilateral trade in alternative currencies. Global investment decisions that would have historically defaulted to dollar-denominated assets begin seriously considering and funding alternatives. Every individual decision seems incredibly small. Each one appears entirely manageable on its own, but the cumulative, compounding effect of thousands of global institutions and sovereign governments making the exact same directional decision simultaneously results in a structural permanent reduction in the global demand for US dollars. Reduced demand for dollars guarantees a weaker dollar, and a weaker dollar means that every single import you buy becomes exponentially more expensive. Every foreign good, every raw material, every product manufactured with components sourced from outside of America will cost you more. A weaker dollar is not some abstract, high-level financial event. It is your weekly grocery bill going up. It is your gas prices going up. It is your insurance premiums going up. It is your baseline cost of living escalating at a relentless rate that your stagnant income simply cannot match. It happens quietly, relentlessly, and without a single dramatic crash that the average person would recognize as the root cause. The institutions I spoke with in Asia are not planning to dump their dollars dramatically and crash the system. They are reducing their dollar exposure gradually, consistently, and in stealthy ways that their own domestic political audiences will never even notice or understand. This effect compounds over months and years. And by the time ordinary, hardworking Americans feel the full, crushing impact in their cost of living and their eroded purchasing power, the structural adjustment will have already finished. The window to protect your family's wealth will have completely slammed shut. The action plan, what you must do. Now let me tell you exactly what you need to do right now. I am basing this not on academic analysis from a distance, but on what I personally observed on the ground, and exactly what I personally changed in my own portfolio positioning as a direct result. Action 1. Build gold exposure, 10% to 15 nulses. Build gold exposure to between 10% and 15% of your total portfolio immediately. I stated this explicitly on Bloomberg television directly after I returned from this trip. Currency values are facing severe systemic risk. Diversification, high liquidity, and gold are precisely what investors need right now. While this is not a brand new recommendation from me, the sheer urgency behind it has escalated significantly after what I witnessed during those 10 days. The reserve currency stress I've warned about for years is far more advanced than even I fully appreciated before taking this trip. Gold has risen roughly 70% in the past 12 months, and the macroeconomic forces driving that rise are accelerating, not slowing down. Tickers like GLD and IAU can provide you with direct gold exposure through any standard brokerage account. Action 2. Introduce meaningful international diversification. Introduce real international diversification into your portfolio, perhaps for the very first time. Look, I know most American investors have been handsomely rewarded for the last few decades by heavily concentrating in American assets. But that concentration was only mathematically rational when American economic dominance and American geopolitical reliability were entirely unquestioned. The people I spoke with in Asia, who collectively hold 40% of all U.S. Treasury bonds, have already concluded that both are highly questionable today. When they act on that conclusion gradually, the dollar assets most Americans are heavily concentrated in will feel the pain. Funds like VXUS, the Vanguard Total International Stock ETF, can provide broad international diversification at a very low cost through any standard broker. Action 3. Reduce exposure to overvalued U.S. tech. Seriously consider reducing your exposure to the most dangerously overvalued American technology stocks. Remember the data. Goldman Sachs projects 3% annual returns from American stocks over the next decade. Vanguard projects 5%. At those microscopic return projections, the premium price currently being paid for American technology stocks at 45 to 80 times earnings cannot be justified by any conventional sane investment analysis. In an economic environment where severe dollar weakness adds another heavy layer of real return erosion on top of already terrible nominal returns, the opportunity cost of holding maximum concentration in U.S. tech at peak valuations is simply the most expensive financial mistake an ordinary investor can make today. Action 4. Add measured emerging market and China exposure. Consider a measured strategic exposure to international markets, specifically including emerging markets with exposure to China. I am not telling you to make a massive, concentrated, bet the farm play on China. I am advising a measured, highly diversified exposure to robust markets that are currently trading at 12 to 15 times earnings, compared to the American market trading at 35 times earnings. Given those relative valuations, the risk-to-reward ratio of international diversification has never looked more compelling in my entire financial career. Broad emerging market ETFs will give you this exposure through any standard brokerage account, completely eliminating the extreme concentration risk of trying to pick individual countries or single stocks. The closing window I spent 10 eye-opening days inside China. I came back home with a much clearer, sharper picture of exactly where the world is heading than any printed report or detached data analysis could have ever given me. The global perception shift is incredibly real. The geopolitical recalibration is operational, not theoretical. The dark financial implications for dollar-denominated assets are vastly more significant than most American investors currently understand. And the critical window of time to position yourself safely before these massive implications become fully priced into global markets is currently measured in months, not years. The United States can no longer be relied upon to fight to defend its interests. That is the exact message I heard from every single high-level person I spoke with across Asia. And what that means for your money boils down to this. Every single dollar you own is only worth what the rest of the world believes it is worth. And right now, the world's belief in the US dollar is shifting much faster than the numerical balance in your bank account currently reflects. You must act now while the window is still open. If this video revealed something critical about America's shifting financial position that your own advisor has never bothered to tell you, hit that like button right now. Subscribe to this channel immediately, because we are going to track every single development of this monumental global shift together in real time. Finally, I want you to leave one honest comment down below. After everything you just heard in this video, what percentage of your current portfolio is invested outside of America? Write your percentage in the comments below. I read every single comment personally, and I will see you in the next video.